China stocks are still in their early stages despite the recent run-up. Today we will analyze the valuation of China stocks, explore why they are so undervalued, and discuss their long runway for growth. We will compare China's GDP growth with its stock market performance. Since 1990, the US GDP has increased fivefold. Over the same period, the Nasdaq has surged 109 times. That's 21-fold of its GDP growth. How about traditional indices like Dow Jones? It has risen 17 times, and that's at least two-folds of its GDP growth. Now let's examine China's GDP versus the stock market and their potential. I'm Kon Hao. My work in this channel is to study behavior science and finance, discover correlation between different markets, and uncover potential opportunities. Before we dive into today's topic, please take a moment to read the disclaimer. Since 1990s, China's GDP has increased by 49 times. Did its stock market grow by multiple folds relative to its GDP like the Nasdaq or Dow Jones? China's stock market has only risen 34 times, not even on par with its GDP, let alone exceeding it. Though China has a long history, its stock market is still very young. If we were to compare it to a blue chip index like the Dow Jones, I would say China A50 would be a close match. According to my chart, it started being tracked in 2005. Since then, it has risen only 3.7 times. While China's GDP has grown by 8.5 times over the same period, even its blue chip stocks have underperformed relative to GDP growth. What does this tell us? China's stock market could be undervalued. The key question is, does it have growth potential? Looking at this chart, China's stock market has been consolidating for nearly 2 decades. Historically, every consolidation phase eventually ends with a breakout, either upward or downwards. For a breakout to the upside, there must be a strong and compelling growth narrative. In trade and business, China has successfully transitioned from a low-end manufacturing and infrastructure-based economy to a high-tech economy. And what are the high-tech industries that have taken the world by storm since the pandemic in 2020? It is EV and AI. In 2021, as the world was recovering from COVID-19, the EV industry helped propel US indices to a new high. Then, the launch of ChatGPT in late 2022, the AI boom drove another spectacular rally in 2023 and 2024. But now, the tides are shifting. BYD has surpassed Tesla in electric vehicle sales, and the emergence of AI leader DeepSeek in January 2025 has positioned China at the forefront of the EV and AI markets. I believe that the high-tech industry like EV and AI or even quantum computing will be the growth engines of the global economy in decades to come. And there is a high probability that the market may break above this consolidation. China unleashed a stimulus blitz last September, and they have stated that they will do more if necessary. Technically, the market is currently in a retracement phase. The next move could be an impulsive third wave. We cannot perfectly time the market, but some investors may make informed decisions based on analysis of trends and signal. Market often provide valuable signals that investors can analyze to gain insights into potential trends. Stay tuned for my coming tutorial. Remember to subscribe to our channel. Feel free to leave any comments below. I'd love to exchange ideas with you on what is about to come. Really happy that you stayed through this tutorial. You have many great trading weeks ahead.